Hello and welcome to India Business Hour. I'm Archana Solanki. Here are the headlines we're tracking this evening. Donald Trump announces a 90-day pause on tariffs for all non-retaliating countries, but for China. He announced an immediate increase in tariffs to 125%. Beijing urges United States to meet it halfway to stop the escalating trade war, but vows to fight to the end if a compromise cannot be reached. Stock futures fall after a massive rally on Wall Street, spurred by President Donald Trump announcing a 90-day reprieve on some reciprocal tariffs. Dow Jones rallied almost 3,000 points, while the Nasdaq and S&P 500 also secured their biggest one-day point gains on record in Wednesday's session. Asian markets rebound following Wall Street's gains after Trump's tariff pause. Japan's Nikkei jumps over 9%, while Kospi also clocked gains of 6.60%. European stocks rise sharply at open. RBI releases stricter draft rules on gold loans, proposes 75% loan-to-value ratio along with tighter valuations, purity norms and audits. RBI also floats a draft paper to expand the scope of co-lending arrangements to all regulated entities. TCS kickstarts the Q4 earnings season with a subdued performance. Company's net profit and revenue came in below street expectations, while revenue in US dollar terms declined by 1% on a sequential basis versus CNBC-TV18 estimate of 0.8% decline. Company wins deals worth $12.2 billion during the quarter. Management says FY26 should be better than FY25 despite short-term uncertainty. Right, as stock markets around the world have surged and bond yields have come down as global investors welcome a 90-day pause in US reciprocal tariffs to allow for deal negotiations. Asian equities surged with Japan's Nikkei jumping over 9% and South Korea's Kospi up 6.6%. European markets followed suit, opening sharply higher. The pan-European stock 600 climbed over 5%, led by strong gains in banking stocks such as Barclays and Deutsche Bank. The rally provided much-needed relief after a week of steep losses. After announcing the tariff relief on social media, US President Donald Trump spoke to the media and indicated that trade deals will be finalized with several countries, including China, and praised the US bond market. He also warned of doubling tariffs if countries retaliated against the US. Listen in.
You know, look, nothing's over yet, but we have a tremendous amount of spirit from other countries, including China. China wants to make a deal. They just don't know how quite to go about it. You know, it's one of those things they don't know how quite. They're proud people. And President Xi's a proud man. I know him very well. And they don't know quite how to go about it, but they'll figure it out. They're in the process of figuring it out, but they want to make a deal. I did a 90-day pause for the people that didn't retaliate because I told them if you retaliate, we're going to double it. And that's what I did with China because they did retaliate. So we'll see how it all works out. I think it's going to work out amazing. I think that our country is going to be at the end of a year or shorter, but I think we're going to have something that nobody would have dreamt possible. Bond market is very tricky. I was watching it, but if you look at it now, it's beautiful. The bond market right now is beautiful. But yeah, I saw last night where people were getting a little queasy. I think everything had. Well, the big move wasn't what I did today. The big move was what I did on Liberation Day. I thought that people were jumping a little bit out of line. They were getting yippy, you know. They were getting a little bit yippy, a little bit afraid, unlike these champions, because we have a big job to do. No other president would have done what I did. No other president. I know the presidents. They wouldn't have done it. And it had to be done. What was happening to us on trade, not only with, you know, if you look at it, not only with China, but China was by far the biggest abuser in history.
Meanwhile, Kevin Hassett, who is the director of the National Economic Council, tells CNBC that the moves in the market were just coincidental to Trump's announcements of a tariff pause. He added that a lot of deals are nearing a close. Listen in.
So it could well be that the announcement that came out yesterday was going to happen anyway because there were so many deals teed up. There was a discussion about whether a general pause or a few deals that are just about finalized are the way to move to the next step and to make it clear to markets that we're serious about the strategy that we're following. And I think in the end, everybody decided as a team, all the way from Peter Navarro to whoever else you think is on the other side, agreed to do it this way. And I think, the fact that the bond market was telling us, hey, it's probably time to move, certainly would have contributed at least a little bit to that thinking. But it wasn't the bond market that made a panic move because there was a very systematic, well-planned move that was just about to happen that just turned out to be at the same time. For sure, there's a bunch of offers that are really sensible offers, and they're coming from our top trading partners, and it's some of the most progress in trade negotiation that I think probably the most progress that we've ever seen. And so I think that this system that the president set up to say, hey, we're serious about negotiation, we're serious about reciprocity, if you guys come down, we'll come down. To do that, we've got to have some negotiations. The fact that people started to send stuff. We had 2 deals almost closed as of last week, almost closed. Getting them closed requires the lawyers to work forever and so on. And so getting them closed by yesterday was not quite going to happen. But yes, there's a big inventory of deals that are right close to the finish line.
And as Trump threatens China with additional tariffs, China says it's not scared by the threat and will not accept the blackmail. The Commerce Ministry has added that they are open for dialogue with the U.S.
China's position is clear and consistent. The door to talks is open. But dialogue must be conducted on an equal basis with mutual respect. China will stand by its position until the end. Pressuring, threatening, and blackmailing are not the correct ways to deal with China. We hope that the U.S. will work with China based on the principles of mutual respect, peaceful coexistence, and win-win cooperation. We will properly resolve differences through dialogue and consultation. I have reiterated China's position many times, and it is very clear. We do not provoke trouble, nor do we fear trouble. The legitimate development rights of the Chinese people and the people of the world cannot be taken away. China's and other countries' sovereignty, security, and development interests should not be infringed upon.
Meanwhile, European Commission welcomed the tariff pause, calling it an important step towards stabilizing the economy. Taking to X, the Commission's head said that clear, predictable conditions are essential for trade and supply chains to function. She added that the EU looks forward to constructive trade negotiations with the US, possibly for a zero-tariff agreement with the Trump administration. Let's in fact listen into some reactions coming in from former Federal Reserve officials, market experts and economists on what they make of Trump's tariff pause and what it could mean for the US economy, the Fed and the financial markets.
No, this is unusual. Let's just face it. I think the Fed was anxious, very anxious, if you will, that these tariffs were going to keep rolling as they have been. And I think they're breathing a sigh of relief right now because there was a lot of issues around that had to do with liquidity in the market. People, they were moving away from the U.S. We saw the 10-year and the securities yields on those moving up. There was concern about refinancing the debt. Those were all things that were on the table, and now they have this kind of breathing room and hopefully turn to a little more normal circumstances. But remember, I think we're all paying attention to the tariff, as we should, but also the United States has a significant amount of debt to both refinance and refinance new debt, and the debt is really quite an important topic that I think has been sidelined here temporarily because of these tariffs. And we need to turn back to that issue.
It's an important pivot. The question is, how long is this pivot and how much of a reversal is it? I think of it as this was a necessary step to calm markets, but it will not prove sufficient unless we go further in the reversal. So I think you need certainty. I think the 90 days, that's a good period, but quickly people are going to start asking what happens next.
Very risk-friendly announcement there, but got to remember that the tariffs even now are much higher than they were, a month ago, and the highest they've been in some time. Although a lot of that is the U.S.-China piece of it. The numbers today 10% across the board with a lot of extra tariffs on China is probably in the ballpark of what they were penciling in, at least in one of their scenarios, maybe not their baseline. I think what was really probably of concern to them, and the chair indicated that last week in his comments, is that these numbers were much, much bigger than I think almost anyone, including the Fed, expected, which would have made their job even that much harder. But, you know, if these tariffs are in place, we're going to see some upward pressure on inflation, at least for a while, and potentially, you know, a drag on economic growth.
We're taking some economic pain, and every day that goes by where we have these maximum pedal to the metal tariffs, the uncertainty level, the economic weakness. I mean, every time you turn around, there's some economists lowering economic growth expectation, raising inflation expectations. That's not a good combination. So I suspect this noise, this pain's not over. As the economy begins to feel the effects of the big headlines around tariffs. We've seen some attempts at a rally. We'll get another one at some point in time, but I think we'll have to retest, and then the question will move to the fundamentals. And the fundamental question is, how bad is the economy and therefore earnings damaged? My guess is we got a lot of estimate cuts in front of us, starting with the first quarter releases, and outlooks going forward are going to be either I have no idea, or they're going to be a little bit lower.
Well, Trump has paused the reciprocal tariffs, but baseline tariff of 10% remains in place for all nations, including India. Parikshit joins us now with exclusive details and clarity on the tariff pause. Parikshit.
In a major reprieve for markets worldwide, US President Donald Trump has imposed a 90-day pause on the reciprocal tariffs for all nations except China. In the case of China, the tariffs have been hiked to as high as 125%. The list of countries getting a reprieve also includes India. But this is not a blanket reprieve. The baseline tariff of 10%, which came into effect for all nations on the 5th of April, will continue. It is only the additional tariff which had come into effect on the 9th of April, including the 16% additional tariff for India, that has been put on the back burner for the next 3 months. India is still hopeful of getting an early trade deal. In fact, we hear from sources that the government is looking at concluding a deal in tranches. And while there was a plan to have a bilateral trade agreement in place by September or October this year, when Donald Trump visits India, it's quite possible that we may have an early harvest deal in the next 3 to 4 months. And the hope is that this would put an end to the reciprocal tariffs completely. Now, coming to other nations, the Chinese tariffs will be as high as 125%. The Section 232 tariffs on steel, aluminum, and the automobile sector, which are as high as 25%, that continues to be in effect. The carve-outs for the pharma sector, for the semiconductor sector, the critical mineral sector, those will continue till the time Donald Trump decides to impose more tariffs on these sectors as well. When it comes to the European Union, because the EU retaliatory tariffs have not gone into effect, the EU's reciprocal tariff rate is also being paused, and they will too be tariffed at 10% baseline rate.
Thank you, Parikshit, for that. To understand how the tariff pause impacts India, JP Morgan's James Sullivan says that the nature of trade between India and the US was different versus China. Listen.
The structure of trade from India to the United States is very different than, let's say, China as an example, because of the services component. And the one aspect that we haven't spent a lot of time talking about is the fact that the US administration is almost entirely focused on trade in goods, not trade in services, where the US actually has a surplus. If that narrative starts to shift, we have to recognize that the large majority of Indian exports to the United States are IT services. Those stocks have taken a significant hit due to the risk of recession in the United States and the lack of corporate expenditure that would then hit the IT services top line. But it's really the nature of goods versus services, India versus China, that we're very focused on.
Noted American economist Jeffrey Sachs has warned India about getting closer with the United States at the expense of its ties with China. Speaking with Shireen Bhan, he said that India should not be anti-China to please the United States. He also added that the US President, Donald Trump, is wrecking the global economy.
Market capitalization in 2 days, you're probably on the wrong track. The United States is on the path of wrecking the world economy once again. This is not U.S. policy. This is not congressional policy. This is not U.S. public policy. This is Donald Trump's policy. He is single-handedly wrecking the world economy. And I think the damage is going to be done before it gets undone. India really needs normal relations with China. And India should appreciate this is a great civilization, and this is a country that's going to play a huge role in the world in the 21st century. I mean, a huge role in the world on all sorts of things, on culture, on economy, on technology, on global peace. Yes, have good relations with the U.S., but don't be played by the U.S. Don't be anti-China because that makes the U.S. feel so good and speeds your agreement. It's the end of American leadership, I would say. It's the end of other countries looking to the United States as a stabilizer, as a rule-based order, although that was quite frayed already, but now no one could utter those words with regard to the United States. Similarly, China was not in any way isolationist. It was the major trade partner of probably 150 countries in the world. But China has aimed for the last decades to be a responsible participant in the international system. China now has to take a more leadership role. I think China will have to enable the renminbi to play a more international currency role. It's been very gradual, step by step, but I think it's going to have to accelerate.
All right, it's time for a short break, but coming up next, we get you the fine print of the earnings reported by IT major TCS. Stay tuned. Well, TCS has kick-started the Q4 earnings season with a subdued performance. Company's net profit and revenue came in below street expectations, while revenue in US dollar terms declined by 1% on a sequential basis. Rima has the fine print.
So TCS, as you pointed out, it's a bit of a subdued quarter as the macro uncertainty lingers on. The company's constant currency revenue growth has declined by 0.8%. Dollar revenue is down 1%. So sequentially, revenues have declined for India's largest IT major. But revenues ex of the BSNL, according to analysts, has gone up by 0.6%. But where the street could be a little disappointed is the margin performance, because margins for the company have fallen by 30 basis points to 24.2%. And this is despite lower revenues on a sequential basis from the low margin BSNL deal, some productivity benefits. And the company's, when you can see the numbers, there has been an increase in the other expenses. So some tactical investments made by the company, which have hurt the company's margins. Margins on a year-on-year basis are down even more sharply, because Q4 of last year, margins were at 26%. So deal wins are quite strong. So deal wins for the company have actually gone up 20% on a sequential basis to 12.2%. BFSI is strong, but there is pressure seen in the consumer vertical. The company in the press conference has indicated that while the clients are not panicking, you are seeing, and there is no major impact per se in terms of, decisions of deal ramp-ups or deal ramp-downs or cancellation. You are seeing delayed decision-making. So clients are in a bit of a wait-and-watch approach. And given the macro uncertainty, the company's also decided to pause on its wage hikes, which would have otherwise been effective 1st of April.
Thank you, Rima, for that. Let's listen to what the management had to say at their Q4 earnings press conference as Rima quizzed them on their FY26 growth and wage hike prospects.
Q4 and FY25, if you could just tell us what was the growth ex of BSNL, could you put that into numbers? FY26, how will it compare versus FY25? And also, given the macro uncertainty, are we seeing deal cancellations, ramp downs or pauses? If yes, what's the extent of it and in which sectors? Samir, if you could explain the margin performance, 24.2 versus 26% on a year-on-year basis. That's a sharp decline. And next year, do you think margins, you can do better given the low margin deal BSNL ramps down? And Milind, on wage hikes and hiring.
Rima, as I mentioned, overall, while we had a degrowth of 0.8% on a sequential basis, all the major markets grew. Most of the industry verticals grew. Our international business had a positive growth. Okay. I will not be able to call out what is the extent of BSNL degrowth here. What would be the international business growth?
So international will be approximately sequentially, right? 0.6%.
0.6%. Okay. On last quarter also I mentioned that we said CY25, we expect this to be better than CY24. We still believe, based on the order book that we have announced and kind of deals we have signed, while there could be some short-term uncertainties, FY26 would be a better year than FY25. Okay. On the business, overall business environment, while till February we were quite positive and we were seeing very optimistic about the quarter, we started seeing some amount of some uncertainty creeping in March and resulting in some project delays, some decision making delays. We have not seen any major project cancellations. There are some ramp downs here and there, but there are some delays in decision making, and that's what we observe at this time. And as I said, we believe that maybe over the course of next few months, this uncertainty should settle in and we should be back to business.
So Rima, from a Q4 to Q4 margin perspective, I think TCS was the only company who probably gave a full cycle of increments and also did merit-based interventions regularly through the period. That, as well as combined with investments in capability building, in our infrastructure expansion further, is the overall impact which we are seeing. Sequential basis, the margin impact was 30 basis points. Also on merit-based interventions or tactical interventions which were done through this quarter sequentially. You asked about FY26, absolutely. So first, our overall guidance range, or the guidance beacon which we call it, still remains at 26 to 28%. There is a gap, and given the current environment, there might be some impact on the operating leverage, maybe because of utilization taking an impact. But overall, the operational levers which we have been talking about, whether it is in terms of pyramid, utilization, and productivity, still remain. And we believe that should enable us to get through. Also, uncertainty provides an opportunity, and we'll use this opportunity from a cost optimization perspective as well. Sequentially, the tactical interventions were about 100 basis points.
And what were they?
They were mainly linked to promotions, merit-based promotions.
Rima, the hiring, we have onboarded 42,000 trainees in FY25, and FY26 number will be similar or little higher. Regarding wage hikes, considering the uncertain business environment, we'll decide during the year when to make that happen.
Right, on to other news that we are tracking this evening. US President Donald Trump said that Israel will be the leader of a potential military action against Iran if Tehran doesn't give up its nuclear weapons program.
Mr. President, on Iran, you said the other day that if they do not agree to a potential nuclear deal, that it would be very dangerous for them. What specifically?
Well, they can't have a nuclear weapon.
Did you mean military action, though, if they don't agree?
Oh, if necessary? Absolutely. Yeah.
And you have a
deadline for these talks?
Yeah, I do.
And
You're talking about with Iran?
Yes.
Yeah, I do.
Do you have something definitive this weekend, or do you see this as the start of a process?
It's a start.
Do you have a timeline?
We have a little time, but we don't have much time.
Who is starting the
Because we're not going to let them have a nuclear weapon.
Is
Can't
it
let them have a
awkward to
nuclear
be there,
weapon.
Mr. President?
And we're going to let them thrive. I want them to thrive. I want Iran to be great. The only thing they can't have is a nuclear weapon. They understand that. But with Iran, if it requires military, we're going to have military. Israel will obviously be very much involved in that. He'll be the leader of that. But nobody leads us. We do what we want to do.
Right, on to some important national news. 26/11 attack conspirator Tahavur Rana has arrived in India, and he arrived earlier today, a day after a multi-agency Indian team left with him on a special flight. Reports state that the flight landed after 2:30 p.m. and he's likely to be lodged in Delhi's Tihar jail. Rana had appealed against his extradition to India, but the US Supreme Court dismissed his plea. CNN News 18's Arunima brings us this report.
The NIA headquarters in Delhi have become a fortress. There are barricades put outside the headquarters. The entire carriageway leading to the CGO complex headquarters has been sanitized. There are vehicles called Vikrant, which is the Delhi police logistic vehicles, carrying tear gas, batons, and about 100 personnel, equipment for about 100 personnel that have been deployed. On the other side is the riot action vehicle also of the Delhi police that has been deployed. So Delhi police and paramilitary personnel are patrolling this area continuously, and all of this is because Tahavur Rana, the main accused of Mumbai 26/11, an alleged co-conspirator with David Coleman Headley, he is landing in India. He's one of the top masterminds who's going to be extradited, something that President Donald Trump had promised. NIA would want him to answer about the conspiracy that ISI hashed. It was Tahavur Rana who provided the covering letter for David Coleman Headley, based on which he got the visa not once, not twice, but 6 times. NIA suspects Rana and Headley both were aware about the ISI's plans. NIA also wants to confront Rana with the email exchanges he had with David Coleman Headley, ask him about why Rana also visited India just a week before the 26/11 attacks happened, and most importantly, if there are any sleeper cells still active in India, Lashkar-e-Toiba sleeper cells who could be planning and plotting to carry out more terror conspiracies against India. Definitely, it's a big diplomatic win for India, also an acknowledgement of the prowess of India's investigators.
And with that, it's a wrap on this edition of India Business Hour. Thank you for watching. The news continues right here on CNBC-TV18.